The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is we are really at the wires, kids. Now, you know, we only got like 18 more days till the end of tax season, and the Ever Ready Bunny is kind of getting less ever ready. So if you are putting it off, don't put it off, because we're going to hit a wall here. And a lot of people think that, oh, good, I'll just file an extension and it all goes away. It does not go away. The only thing that goes away is you don't have to submit your paperwork. But the liability is due on April the 15th. So if you find out that you owe money, you want to make sure you get that return filed, because the big penalty is when you don't file the tax return. So not paying is a little penalty, but the big penalty is when you don't file the tax return, because they base that on your liability. So, and I'm joined in studio, for those of you that have missed her, Tiffy's with me. Tiffany.
Hey, happy Saturday.
Happy Saturday,
And
Tiff.
we're going to celebrate my daughter Grace's birthday today.
She was an April Fool baby.
Yep. And so I'm so excited that we get to leave this place for a moment or so.
But we're very thankful. You know. Anyway, all of our offices are open 9 to 5, 9 to 9 Monday through Friday, 9 to 5 on Saturday. Our McKinley Mall office is open on Sunday. Don't forget, in Florida, sunny Florida, our airport pulling office at 1450 Airport Pulling in Naples is open, and we'll get it done.
Yeah, and I just want to give glory or thanks. I just want to say, over tax season, I started in December. I've lost 40 pounds, and I just want to give a shout out to myself, I guess. So it's not the tax size.
It's not easy to lose
no,
weight, especially in this
thank
environment.
You. Yeah. And
so I want to talk about things that I want you to double check when you're doing your return to make sure it's done correctly. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And, of course, you can always go to our website at egtax.com, ask the tax lady, and I will answer your questions. Happy to do so. But here's some of the things that people, I think, have to watch out for. And the first thing is the IT-229. If you are a homeowner in the listening area, of course not in Florida, but in Western New York, if you're a homeowner and you haven't been filing a tax return, there is a refundable credit that's available to homeowners, even if you don't have to file a return, and it's closing this April the 15th. So you want to make sure you get it in. It's called the IT-229.
Yep, the property credit.
And it means at $350, it for 3 years can be like $1,100.
And so the year that is closing is 21. And so I've been really good about sniffing out money. And so if people I notice haven't claimed it, I'll amend their 21, their 22, their 23. So they're going to get $350 times 3, which is,
you know, who I worry about, though. It's not our clients that are here, because we do sniff it out. Mm-hmm. But it's the people that are sitting home saying, well, I don't have to file, so I'm not going to file. And that's great. You don't have to file, but in this case, you want to file.
Correct.
And it's called the Real Property Tax Credits, the IT-229, and 2021 is closing April the 15th. So
right.
You would lose, if you qualify, $350 to $250 to $350 in credits.
And they got rid of it for 24.
And the other thing that is closing April the 15th is the $1,400 stimulus payment. If again, it's the same class of people that didn't have to file, didn't do a return, didn't get the $1,400 stimulus. you're entitled to that money. If you're a couple that's a married joint, it's $2,800. So if you think you qualify, get it done. Get those returns in there for the stimulus so that you can get that money.
Correct. They were supposed to put it in people's Social Security during COVID, but if you notice that they didn't, then that money is yours.
Right, absolutely. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930, and a cell phone. Text us at 716-8030930, and we're going to take a call from John. Hey, John, how can we help you, sir?
Yes, I have an estate from my father who died a few years ago, and I wanted to know whether I needed to file the 1041 form. The earnings on the estate for 2024 are approximately $1,400.
Yes, you have to
under
file.
the impression that the tax due would be over $3,150 was the cutoff. But I was also told
Earnings.
that I may have to file it anyway.
You have to file it because there's a $600 exemption.
So there's not much wiggle room
Right.
on a 1041.
So, yeah, I mean, there's not going to be much taxes due on it, and maybe none at all when you take your expenses that are deductible. But, yes, you have to. You should do the 1041.
There's no exemption if it's $600 income on the estate. I have to file the form.
That's right.
Yeah, good
Okay.
question. Yeah, I'm doing a
Well, I
1041
mean, John,
later
if
today.
you don't file the form, then they'll just bill you later with penalty and interest. So it would be my suggestion that you do.
Okay. Is there an equivalent form that I need to file for New York State?
Yes.
Yes. I
What
didn't
form?
bring my
There's
phone
a
with me.
there's a New York State fiduciary return that has to be filed as well.
Could you tell me what the form
Do you have your
is or
phone with you?
what it is called exactly?
You want to know? I think it's I can't recall right now because everything's by computer, so I don't really look at the
on
form and
on the
they
break,
dance together.
if you listen for the
But
break,
if I'll tell you what, if you just we're gonna take a break in about a couple minutes we're gonna take our break, and then I'll look up and get that farm number for you,
If
and
you
I'll
listen for a
I'll
few
say
minutes.
I'll shout it out over the radio. Okay.
Very good.
Thanks, John. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We have some
Yep. We've got text. And so the first one is, I love your show. My 16 and 20-year-old children, my dependents, are full-time students. They each make approximately $10,000 in 2024. Are their federal and New York State filings free? We charge $25 to
yeah,
do
we charge
dependents.
for kids $25 unless they're more complicated. But the kids, if they're making $10,000 and they had withholding on the federal, they're going to get all that money back. If there's withholding on the state, the standard deduction in New York State for kids that are claimed on your return is a little over $3,000. So they might have a liability for New York State. So you're going to have to get those things done.
Yeah, and
a
don't-
lot of parents don't file their kids' returns because they don't want to bother with it, and that's money.
Yeah,
that's
and
just
don't
that's
forget
staying
to
there.
do the American Opportunity Tax Credit for the 20-year-old who I assume is in college. So don't forget to do the American Opportunity. And then on the state, the college credit on the state for the 20-year-old too. But we have a charge of $25, and I don't know if they're free, like if you use one of the software programs.
Yeah, probably.
Yeah.
Probably. All right. Anyway, I'm Esther Golias, the tax lady. We're going to take a short break. We'll be back at the other side, and we'll get John his answer, too. Hey, and John, because you're a family member, we're going to let you know the name of that form. It's a New York State fiduciary return. It is an IT 205.
Right.
So now John knows. Okay, so I wanted to talk about some of the things that people might do incorrectly. I don't know if people realize that when they put money into a Roth as opposed to a traditional IRA, that they still can qualify for the pension savers credit.
Yeah.
So if you're somebody that's not getting the benefit for the traditional IRA, but you are a relatively low wage earner, like under 50,000, there is a credit you get for putting money into a pension plan, even a Roth, and that credit can be up to
300 and
it can be up to 50% of what you put in. It's a lot of money, and so so if you did a Roth, look into the pension savers credit. And like Tiffany was just talking about the AOTC, American Opportunity Tax Credit, a lot of times parents say that I'm going to give it to my kid. It does most of the kids, you're just throwing away a $2,500 credit. It's much better for the parents to take it. If you didn't take it because you let Junior do it, amend those returns because you probably have a lot of money coming back. Now, it may not be true if you're a very high wage earner, because in that case you wouldn't qualify anymore. But for most people whose income are under 150,000, the American Opportunity Tax Credit should be something that you look at on your return, even though your kid might have borrowed the money.
Yeah, because the thing is the American Opportunity Tax Credit, part of it is a refundable and part of it is a non-refundable. So a child under the age of 23 is not entitled to the
refundable
refundable
part.
portion unless they're fully supporting themselves. So that portion is lost. And so that's why it doesn't usually behoove dependents to do that, or young kids
Well,
to
and
take
sometimes
the
the
credit.
dependents do it and they do it wrong. So now they're up for an audit, you know?
Right.
So so that's real important. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We got some more
Yep.
texts here.
It says, "Good afternoon, EG Tax. We're handling my brother-in-law's estate. We have sold all of his assets, and the money is in the bank. That we held $20,000 in escrow to see if the septic passes inspection. Can we file the final estate return while the $20,000 is still in the escrow? We may not get it back."
We may not get it back. What does
Yeah,
that
and
mean?
so I'm wondering, because if it doesn't pass inspection, they wouldn't get the escrow back.
Okay.
And
All right. Oh, okay. Well, the thing is, you close the estate when there's no more money in the estate, and if there's going to be $20,000 that's being held, I wouldn't close the estate because you're going to have to disperse it, you know. So I wouldn't close the. If there's no money, remember, if there's no money, if the estate doesn't make any money,
Right.
There can be no liability anyway.
Yeah, I mean, it would have to be that it made a lot of interest on
Right.
that 20,000,
Right.
and that's not going to happen.
Right.
So I
Absolutely.
don't think they're going to even have to file an estate tax return. So
Right, but I understand somebody wanting to close it out,
Right,
you know.
right,
But
right.
but when there's money sitting out there, I wouldn't close it. Wouldn't finalize it
No.
just in case, you know.
yeah,
Let's see. Did you? Oh, we were talking about the American Opportunity Tax Credit.
Mm-hmm.
Talk about the tax credit on New York State.
sure.
for
So
education.
For education, that is the New York, is that the 280? And so that is, you can either use it as a credit or you can move it to your itemized deduction, and it's up to $400, and it slides depending on how much you spend on college. It maxes out at $400, but a really beneficial thing is you could slide it to an itemized deduction, and it's actually done on the 272, and so you could see which way yields a better answer. And so
and some
again,
of those
it's up to $400.
differences can be
really dramatic.
right?
Yeah.
So sometimes the education credit for the first 4 years of higher education for your dependent child is American Opportunity Tax Credit on the federal. Now, on the federal American Opportunity Tax Credit, you can also increase the amount that you paid for tuition with books and other
Supplies.
fees and supplies for your college student. On the state of New York, however, it's strictly for tuition for the first 4 years of higher education.
That's
and you
right.
have to adjust that for any distributions that you've taken out of the 529.
Absolutely. Yep. which is often missed. But New York State probably won't miss it.
All right. Another thing that I want to make sure people understand is when you're looking at your brokerage statements, and believe me, I have seen brokerage statements up the gazoo this year. There's a lot of 199A deductions and foreign taxes paid. If you miss this, you overpay.
Right. Right.
So if you had $80 in foreign taxes and you don't do the 1116, then you have overpaid your taxes by $80.
Yeah, absolutely. Yeah. And so it's taking money away from your income, your taxable income. And so it's a really good plan. And so make sure when you're doing those brokerage statements, you pull off those credits, the 199A and the 1116.
Right. So the 199A is basically the
Small business.
right. It's a small business deduction that was put into place the first time there was the Trump White House, and it was meant to equalize the benefit, the reduction in taxes on corporation to other forms of businesses, and that's the reason for it. So on your brokerage statement, you can have a 199A there for $500, and so you're going to get that as a subtraction from income. And again, if you miss it, you overpaid,
Yep.
right?
Yep.
Okay, we have a quick call coming in from Mike. Hey, Mike, how can we help you, sir?
Hi, Esther. I'm calling about the real property tax credit that you were talking about at the beginning of the show.
Yeah. Uh-huh.
I filed it last year, but I thought last year was the last year.
Last year
so you-
was the last year. The real property tax credit was available for 21, 22, and 23. We're in 24 right now. You're not going to get it on 24. But if you missed it
Oh.
in 21, 22, or 23, you can still go and get it because those years are open.
Oh, I see. I'd have to amend my New York State.
Well, did
return.
you apply for it in 23?
Let's see. I got it last year for 23.
Okay. Did you get it for 22?
No.
How about for 21?
No.
So amend 21 and 22, and if you got the 350, you'll probably get 350 for those years too. So you get $700 back.
Oh, great. Okay. All right. I might have
And
to
don't
talk to
forget,
you guys.
21 expires coming up here April 15th.
Right. So you
And
gotta
that
get
one's
it
going to
done.
have to go paper. It cannot go electronic. So you're going to have to mail it in. Proof of delivery, certified mail.
Oh, wow. Okay.
But it's, I mean, for $350 to me.
It's worth it.
Yep.
And we just charge
Okay.
$25 for those returns
Oh, to amend the return?
for that credit. Yep.
Okay, that'd be great. That's cool with me.
Okay, Mike.
Thank you
Hey,
very
thanks
much.
for calling. Thank you,
Bye.
sir. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 cell phone. We got another text.
Yep.
right?
It says, tax lady, great show. I'm a high income earner, 67. Can I donate to a 501 directly from my pre-tax IRA? Does it get added to my income?
Well, if you take money out of your pre-tax IRA,
Right.
that means it's a Roth.
Is she talking about the charitable distribution?
No. They're saying, can I donate directly from my pre-tax IRA? So when you take money out of your IRA, you can do whatever you want
Right.
with
but
your
it,
money.
But it would get taxed.
Right. So
Oh, she's talking about a 501c3. Is that what
no,
she meant?
can I donate to a 501 directly? Mm-hmm. Right? You can do whatever you want with your money. You can take it out and give it to anybody you want. You can give it to bums on the street. You can give it to a charity if you want. But that is not a qualified charitable rollover. If you're looking at doing that, you can do the IRA up to $100,000 and take it from your pre-taxed IRA and give it directly to a charity. You don't touch it, and that's called a charitable rollover.
Correct. But unfortunately, if the money touches your hands, it
Right.
doesn't
well,
work.
you have to call your broker or whoever manages your your 401k or your IRA and say, I'd like to do a charitable distribution that goes directly to the charity, and they will send the money directly to the charity.
Correct. And it's a really good idea. I have lots of
And the
clients.
cool thing is then you don't pay taxes on it.
Right.
And the charity gets the deduction. So, and there are many people with the high
Income earners who have to take RMDs, although she's not at the RMD age.
right. Well, I don't know how old. Oh,
She's
that's true. She's not.
67.
No, you can't do it at 67.
Correct.
You have to be at least 70. I
Yep.
missed that altogether.
Yep.
You can't do it unless you're 70.
Yep.
The qualified charitable rollover.
So you
You have to
are
be
out
70.
on
so
all
no, so you
accords.
can take the money out and give it to a charity and get an itemized deduction, but you can't do the rollover.
And it still is added to your income.
Right.
Good question.
All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Don't forget that you can exclude the first $20,000 of IRA, pension, and annuity income that you receive when you're doing a New York return if you're over the age of 59 and a half. Unless it is a federal, state, or local or
Municipality.
federal pension, because in that case it's all tax-free regardless of your age.
Right. And if it's
On the federal.
and if it's
on the state.
And if it's monies you receive from a decedent's return, you can exclude up to $20,000 over the beneficiaries.
Right.
Yep.
Right. If you inherited it.
Correct.
Correct. All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break for the news. We'll be back on the other side with your calls, questions, and texts. Thank
Paul Davis Restoration Newsroom. I'm Lucas Buckley. Albert the Alligator's return home to Hamburg will be delayed as the DEC has appealed a court decision that would have seen the gator return to owner Tony Cavallero. Here's Tony's lawyer, Mike D'Amico.
What their intention is, obviously, we don't know yet. Obviously, they're challenging the judge's decision regarding Tony's Article 78 petition, and they have to file a brief and perfect their appeal within 6 months. So we'll know more, obviously, when that happens.
D'Amico says the appeal is a waste of time and money. Attorneys for top shooter Peyton Gendron are asking a federal court for a 1-year delay in his trial. John Elmore, who represents families of the shooting victims, says a change of venue has also been requested. Gendron's attorneys feel he won't get a fair trial in Buffalo because of media coverage. And Congressman Tim Kennedy speaking out about cuts to the education department. He called President Trump's executive order targeting the agency, quote, tyrannical. Republican Congressman Nick Langworthy responded, saying Kennedy's words are meant to incite fear. I'm Lucas Buckley, WBEN.com News.
Hey, to us, you are family. It's interesting. I listen to all these ads on TV, and everybody's talking about everybody being family.
Yeah.
But
I
we
hear that
really
too.
do treat you like family.
Oh my gosh.
Right?
I was with a client last night and she said, when I came into your office and your receptionist was the most warmest, friendliest, she goes, it was the best part of my day.
Oh, that's nice.
Yeah.
And we give you popcorn when you come in.
Yeah.
Anyway. All right. So we're talking about things that you might want to take another look at. If you're self-employed, your health insurance is an adjustment, even if you don't itemize for medical.
Right.
So let's say, for instance, that you have a small business. Maybe your net profit is $2,000 or $3,000. It doesn't have to be your primary business, but you're on Social Security and you're paying into Medicare. And let's say your Medicare is $2,000. Well, you can take that full $2,000 as an adjustment to income, even though you don't itemize. And not everybody knows that.
Yep. I do that all the time, and it's very frequently missed. And so you should take advantage of it if you're a self-employed person. There has to be a profit on your business. It can't be at a negative, but
Right.
it's
So
a
it's
really good
limited
idea.
to your net profit, right? But that's really, I mean, it's really great because if you don't have 7.5% of your adjusted gross income and you can't itemize, then you would have lost that deduction. So
Yeah.
that's really important. Likewise, for self-employed people, don't forget that you can do a simplified employee pension, SEP, even though you might be working someplace else and you're contributing to a 401, 403
Right.
at work, you can also do an SEP. So I think about maybe you're a realtor. I had a young kid the other day was a realtor and he made $10,000, but he also had a job, and he was putting money in his pension plan at work, but he could also do like a $2,200 SEP contribution, and so that saved him money
That's very smart.
while also helping his future.
Yeah,
'cause
and
it's-
the thing is now every year he'll think about it as an option.
That's
And
right.
so-
And here's the other thing. You have till April the 15th to contribute to, if you qualify, to contribute to your IRA. So if you're somebody that's sitting there and you have some wages or self-employment income, maybe you're working part-time at a nursery and maybe you're partially retired and you find out that because of all of your interest that you got this year, and I'm going to tell
a
you,
big
everybody,
year.
there's been a lot of interest.
Yeah.
And you're finding out that you owe money. You certainly got the money in the bank because you're paying all this interest. Think about opening your IRA. If you're over the age of 50 or older, you can do $8,000.
Right.
For you, $8,000 for your spouse. And your spouse doesn't have to be working. Only one of you has to work.
Yep, it's called the spousal IRA, and it's a really good plan.
Right. Absolutely. Okay, what do we got
We've
here?
got high. I claimed head of household for the last 3 years as I'm supporting my 93-year-old mother. She is the homeowner with life tenancy, so I wouldn't have filed for the homeowner credit you mentioned. Should I do an amendment? Also not sure you got the money during COVID as she didn't file. Please advise.
I think that she's entitled to both.
Right. So the mom
If it's a life estate and it's fully been executed over the 5-year period, then the house really belongs to you as opposed to her.
right.
Well, actually,
And
it
so
doesn't. It
if
won't
she-
transfer
if
until
she
she
puts
dies.
it, if the daughter put it on her return, it had to super exceed 6% of her adjusted gross
Right.
income.
But if it's in the mother's name and she does the 229 and the $1,400, she should be able to get both.
Yeah, it doesn't matter that the daughter claimed her.
Oh, that's right. She did say that. That's true.
Right. And so,
Well, no, not yeah. On the 1,400, it makes a difference. You had to.
right, you couldn't be somebody's
Yeah,
dependent.
right.
But how about for the New York
Well,
State
and then
property
the
credit?
question is the house really the daughter's or is it the mother's? Because if it's the mother's, then the mother's contributing to her own support. So that's a can of worms.
Right.
Right.
It really is. It really is. So I can tell you
No
right,
simple answer to this.
I can tell you the thing is the $1,400. If you've been claiming her, the answer is no. She's not entitled to that if you've been claiming her for those years. If it goes back
since
that far,
21, it sounds like.
right. And I don't think she's entitled to the property credit. Probably give us our office a call or call me 632-7886 and I can tease this out a little bit more for
Right.
you.
Then we can ask you directly, and we'll look up all the if, and, ors, or buts. Maybe we can check with an attorney and find out, is the house still hers because she's has a life estate or not? Mm-hmm. All right?
Yep.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. So, are you somebody that put in energy conservation in your home? Here's something that is so confusing to people because they will get a capital improvement paper
Right,
from their contractor
right,
that said, we
correct.
just put in a new roof or we just did a driveway for you, and they know it's a capital improvement. But the energy credit is not a capital, while it may be a capital improvement, it has to be
Doesn't make it
windows,
eligible.
doors, furnace, hot water tank,
Rolls of
insulation, high
Furnace.
these all the high efficiency appliances, air conditioning, central air. Those are what qualify for the 30% credit. And like the winner is the insulation. Insulation's a big winner.
It is.
But if you put in a driveway, it is true it's a capital improvement, but that just means that New York State is not going to charge you sales tax on that improvement.
Yeah, I can't tell you how many people bring in the capital improvement statement and think that it's going to be an energy credit, but it's not. It just simply prevented them from
And
paying
then
sales
people will
tax.
say, well, that seems like a ripoff that I can't deduct something that's making my house better. Well, you want to know why they don't let you take this when you have these improvements to your home?
It adds to the basis of your house.
Well, because when you sell the house, the first $250,000 of gain is tax-free.
Correct.
If you're single, $500,000 if you're filing a joint return. So since they're giving you away all this money, they're not also going to let you subtract and take as a deduction some of the improvements that you made in the house.
Correct, because you
So-
get that wonderful, cushy, big exclusion.
Which is it is a big cushy exclusion. So I wanted to talk about the energy credit. I will tell you, if you can spread out your
windows.
energy improvements over a number of years, you will do better.
Right.
Because if you
Not a
do, I
lifetime.
had somebody the other day did $45,000 in windows. And how much of a credit did he get? He got $600.
$600.
I also had somebody that had $2,000 in windows. How much of a credit did they get? $600. So
It's not a lifetime exclusion like the
Right.
former credit
So
was.
you could, if you could spread out your windows and doors and things of that nature to a smaller improvement each year, you can get this credit year after year after year
Correct.
through planning. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Okay, and brokerage fees, are they deductible?
They are on New York State.
Right.
And
On the New
so
York return, your brokerage fees, tax prep
Yeah.
are deductible, but not on the federal.
do it all the time. Yep.
Right.
So, and then make sure also while you're doing the brokerage fees, make sure you're doing union dues, work boots, work clothing. If you're a nurse, scrubs, stethoscope, blood pressure cuff, things like that. So it's just like all icing on the cake.
Right, your licensure, all that kind of stuff. But that would
Continue
only be
ed.
on the New York return, not on the federal return.
Correct.
Speaking of that, make sure you talk to your representative and senators about making sure that the Trump tax cuts that were done during his former term are re-upped, because if they don't do something about that, then we're going to all have a big tax increase.
Yeah, we really are. The standard deduction is huge.
Right.
Huge. And so the people, everybody would lose, and people who, I think one thing is I'll be happy if the SALT is repealed.
Right, and that's salt. It doesn't
State
mean
and
like
local
salt and
tax.
pepper. It's the state and local income taxes where it's capped at $10,000, and that especially hurts It hurts New Yorkers.
Yep. Yep. Because our property taxes are very expensive, and
But it also hurts people that live in Naples, because in Naples those property taxes, some of those houses are millions of dollars. So the property taxes per millage is less expensive in Florida, but the value of the homes are so much more. The salt repeal would help Floridians as well. The other thing, firefighters credit.
Right.
I think firefighters know this, that they get a $200
$200.
credit. But those of you that have been thinking about becoming a volunteer firefighter, there's a $200 refundable credit on New York
my
State.
friend Rich was getting his tax return yesterday, and he got the $200 firefighter's credit. And then don't forget to do your volunteer miles, which I did for him on the federal. And then he bought some gear while he was being a firefighter, so you could deduct that as a write-off on Schedule A2 under charity. So don't forget all the supplies that you need to.
That's right. So not everything that's deductible as an itemized deduction for charity is a church, for instance, or the Red Cross. Sometimes if you're a volunteer, your volunteer mileage all adds up. And when you're a volunteer firefighter, all of those expenses that you incur, those are also deductible as an itemized deduction. All right, and I just was doing a tax return for this really wonderful gentleman, and while we're going through, I said, well, here you sold $50,000 in stock and it has no basis. And he said, well, what does that mean? I said, what, did somebody give you this stock? And he said, well, actually, I did. I inherited it from my father 20 years ago.
Oh.
Okay. And did you ever take any of the dividends?
Dividends.
And he said, no, I just reinvested them. So I said, with those reinvested dividends, increase the basis. And as I was going through his return, it was about $200,000 worth of stock that had no basis. Had I not pointed that out so he could get the correct basis, he would have paid taxes of about $40,000 too much. And so if you're somebody that has been dabbling in stock and you've been selling stock and they say it's long term, but we don't have the basis, go back and figure out the basis if you can, because it reduces your gain.
Yeah, and while you're talking about basis, don't forget if you're a cryptocurrency seller, a lot of times you won't get a brokerage statement, but you still have to record it on a Schedule D.
That's right.
So make sure.
Cryptocurrency is just like a capital asset, and you have to report that on each one as a trade.
Yeah, yesterday I was with a client who had a $15,000 gain from cryptocurrency. He just said, I thought it was a good time to sell, and so he wanted to get out.
Right.
And it was a $15,000 gain.
I asked a crypto guy yesterday, I said, what is cryptocurrency? And he said, well, that's just a way that people can agree to exchange because they say that there's value. And I said, but there's really no value at all. It's nothing.
Isn't it finding those huge, hard math problems, and whoever gets the hardest?
He said they're actually rolling that back because it's so difficult to come up with whatever. I don't know. Anyway, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us, 716-8030930. Don't forget, we're here 9 to 9, Monday through Friday, 9 to 5 on Saturday. Go to egtax.com, and we will get her done. You only have a few, 18 days before the tax season is over. We're going to take a short break, and we'll be back on the other side. Hey, family, this is Esther Golias, the tax lady. We are in and riding them horses to the very end. We got 18 more days. We will get it done. Wanted to clarify something with the lady that said that she was head of the household with her mom with a life tendency. Wanted to make sure that it didn't transfer before mom's passing, and it doesn't. So mom retained ownership. Well, here's the fly in the ointment. If you're living in that house and it's mom's house, mom is contributing to her own support through that house. So I question whether you are head of household at all. But mom should definitely look into the IT 229, right? All right, and we're going to go to Tom in Tonawanda. Hi, Tom.
Hi, good afternoon. I have a question because I just heard your discussion about business income and deducting health insurance and Medicare. I'm a little confused because I'm retired now and I started a business and I definitely made income. It's not negative, but is there a limit if I've got IRMA? Because that's my concern here. Is I make, not only do I have to get Medicare,
whatever you're paying into Medicare, up to your net profit, you can take as an adjustment to income.
And so it would lower your adjusted gross income, which
Right.
would beat down IRMA.
Right, which would be great because that would be a way to get back at IRMA.
Yeah, IRMA's really bad.
I never did like her anyway.
Yeah, she is.
I had good health insurance when I was working for 30 years, and then I got a pension, and now I've got IRMA, and I'm like, oh, Lord.
Well, we don't like IRMA, but anyway, it's a way to get back at IRMA.
Okay.
So
I don't like it.
Irma is extra tax you pay on your Medicare. Is that what you're referring to?
Yes,
right?
yeah. That's the problem. Yeah,
Okay,
I have to
gotcha.
pay Irma. I have to pay the Medicare, and then because
Yeah.
my income is above a certain level, I have to pay an adjustment. And on top of that, it's pretty low because I'm single, so I have to. It creeps into you pretty quick.
Yeah.
So-
So have
so
you
it's-
on page 2 of the Schedule 1 is where you take that adjustment to income.
Okay,
And if you
schedule.
need help, yeah,
Schedule 1.
if you need help, you can just call us at the corporate office or any of the offices.
So it doesn't. That comes in under Schedule C, or it comes in on something
Well,
else.
no, it's the net profit from your Schedule
it doesn't go on a
C
Schedule C.
limits the amount of self-employed health insurance deduction
Goes
you
in a
can take as
separate
an
place.
adjustment.
It goes on a separate place.
Oh.
You got to put it on Schedule 1.
Okay, so it's not clear that you get the dollar for dollar for it. You get some kind of a percentage, is what you're saying.
Well, everything is a
he thought
percentage.
it went on a Schedule C. It doesn't go
Oh,
on the
no, it
schedule.
doesn't go on your Schedule C. It's an adjustment to income.
On Schedule 1,
Right.
page
Okay.
2.
Okay, thank you. Appreciate
You're
it.
welcome. Good
All right.
question.
Thanks for calling. And we're going to go to Chris. Hey, Chris, how are you, sir?
Good, Esther. A couple questions on the 529 and the Coverdale accounts. Just in general, I'm sure we never could. I was told, and we never did, we never took any of the education credits because I guess for better or worse, we planned ahead. So we were able to pay for my kids' college out of either a 529 or a Coverdale. So my understanding
Right.
is you don't qualify for any of the income.
Well, but
you do
you're-
on the
that's-
federal
but
unless your
there-
income is too
that's
high.
That's what's so frustrating. You have to understand the 529 is only a subtraction on the New York return. You got no benefit on the federal return. So if
Right.
you used the 529 money to pay for education, the amount that you took as an adjustment on New York State would not limit the eligibility for taking the AOTC. Only the appreciation that was part of the education would limit that AOTC credit. So I don't know how long ago you did this, but you should be able to go back and amend that return.
And then, Chris, don't forget, it doesn't exclude you from taking the entire credit on New York State. You have to find out how much education was billed minus how much you took out of the 529. So you might have some surplus that would entitle you to a New York State college credit.
You mean if we took out less than the cost of it?
Right.
Yes.
Correct.
Okay, no, it completely covered it.
Okay. Yep.
Well,
So there was
so
no-
on New York State, you'd get nothing, but on the federal, the only thing that you adjust for is the appreciation.
Oh, okay. So
Unless your income was too
So,
high.
like, let's say that I just did one today. The school was $45,000. So,
Right.
The appreciation that they used when they took out the 529 plan was like 3,000. So that brought it down to 42. Well, the maximum credit anyway is 4,000. So they got the maximum on the federal, but they got nothing on New York State. But
Okay,
the
yeah,
$4,000 credit saved them $2,500.
right. I opened them up when they were quite young, so by the time we started taking out, most of it was appreciated income. You know what I mean? It more than doubled in there. So I don't know how
but
they.
there would be some that wouldn't. I don't,
Okay.
whatever. But
I
I'd
mean,
look into it.
Okay, and then the other thing, and this is kind of a corollary to that, my son is completely out of school now. There's money left in the Coverdale. And effective, I think, November of last year, New York finally got on board where you could use that to fund up to, I think, 35 total, but a Roth IRA.
That's
there's a
correct.
form to do
That's correct.
Okay. If you do that, does that disqualify you for the Savers credit? Because he doesn't make enough income. You know, he would get the Savers credit. Or do you not get the Savers credit because you took the money from there?
If you make a contribution to the Roth, you qualify for the Savers credit, provided that their income's not too high.
But what if the
Yeah,
money
his income
comes
isn't
from-
too high. So what I'm saying, if we took the full 7,000
Yeah,
or
well,
whatever,
if there was no basis, then there's no basis though.
Because the
So-
money came
right,
from
the money
Coverdale.
came from something that you got a tax benefit from, so there'd be no basis
Right.
to do it.
okay, so that's
no.
so he wouldn't qualify
You
for
wouldn't
that credit.
qualify for that, right?
Okay, so but in a tax planning, if we had him put say 2,000 in, and then he would qualify in the 2,000
then he could get the pension savers credit. Yep.
Okay, and then because you can string that out because it's only 35.
But remember, it's his maximum is going to be 7,000. So.
Right, I understand that. But if we took 5 and 2, let's say, we could max it out.
That would
the
be great.
there.
And then he'd qualify for the pension savers credit.
Right, and he'd be able to just stretch it out over a few more years, taking the Roth money out. So that'll work out. And then one other thing, just because a couple callers ago, he kind of perked me. What was that $350? I've never gotten anything other than a star. And
okay. Okay. If you have property taxes, if you're a homeowner paying property taxes, there was a refundable New York State credit for 21, 22, and 23 from $250 to $350. If your property taxes were
6%.
more than
6%.
6% of your adjusted gross income,
which I think
that explains why we never qualified for it. They never. We didn't get it.
Yeah.
Well, there you go.
It's kind of like the college. That's what I tell people. It kind of sucks we don't get to deduct this stuff, but on the other hand, we were thoughtful enough ahead of time.
You're blessed.
We saved the money.
Blessed.
Yes.
And my kids are not strapped with loans. They can just go out and get good paying jobs, and they're done.
You're blessed. You're blessed.
Smart.
Well,
hey,
I made some of the blessing myself. I won't lie to you. Have a great Easter. Thank you very much.
Thank you. Bye-bye. All right. I want to also talk about if you inherited property, remember you get a stepped up basis if you inherited property. And for instance, a house, if somebody gifts it to you, it goes back to the donor's original basis. So understand that basis is so important because it determines whether you pay taxes or not.
Correct.
And another big thing I did the other day, if you're in a nursing home, if you have a family member or your spouse is in a nursing home and you're a private pay patient, in New York State, they charge a 6% bed tax. Now, you think about that. On $200,000, that's $12,000 that they're not supposed to charge you. And you can get that money back by filing an I-258.
Correct.
And so if you're a private pay patient in a New York State nursing home, you get the refund of the bed tax, which is 6% of what the charge was from the nursing home. And that's done on an IT-258.
Yep. And it's too sad because if you don't do it, New York State's not going to tap you on the shoulder and say, "Hey, you missed paying this."
They
money.
do tap you on the shoulder a lot, though, don't they?
Yeah,
but not usually about giving you money back.
Correct.
It's about getting some money back
Correct.
that you won't. Don't forget while you're tax planning, if your child is turning 17 in 2025, that means their child tax credit goes from $2,000 down to $500.
Yeah,
you need that in your planning.
I was with a couple earlier today, and they owed about $8,000, and their child was 16 this year. And I said, don't forget, next year your child's going to be 17, and so that's going to be $1,500 reduction.
And that's what's so important when you're doing your tax planning, because I just had a couple this morning that they're as soon as I see up 17, I want to let you know the $2,000 child tax credit is gone down to $500 now, and so that affects the refund or balance due you're going to get on this year's return. And by the way, it looks there's a lot of balance dues because of all the interest people got, right?
Correct.
Anyway, EG Tax is here to help you not only for this year, but I'm going to tell you as the year unfolds and you can see all these things that are being bantered around in the media about what Trump wants to do. He's talking about repealing Social Security. That would be gigantic for people. And tax on tips and overtime and the repeal of the SALT limitation. So EG Tax, believe me, if this stuff comes down the pike, we will have seminars so we can get people on the right page, because that elimination of Social Security would be gigantic for people. Until next week, if you need the best tax help, come to EG Tax. We'd love to help you. Go to egtax.com, ask the tax lady. Thanks for listening. God bless you. Bye-bye.